Hello again, everyone. Welcome to the Options Mentor. Did you miss me? I know last week I just abruptly didn't put up a video. I meant to, but I went out of town for a short camping trip, and I was so busy getting ready for that. By the time I realized I forgot it, I was on the road. So I'm back. I hope you had a good trading week. Of course, a lot went on. The market continues its skyward ascent. Where it stops, who knows? Of course, we're we can't say long enough overdue for a pullback, but still the market goes higher. This week we have a lot of news, big news, really. We have an FOMC announcement and press conference. That's Wednesday afternoon. And I don't think there'll be a rate cut, but of course, the market will be looking to see when it's going to be. I'm sure hoping it'll be a rate cut in September. The Fed has really been dragging its feet on those because they're worried about tariffs and inflation. It doesn't seem like inflation's increasing that much, but we'll see. We'll have to see how the market takes whatever it is they say. And then Thursday morning, what they call the Fed's favored inflation number comes out, the PCE. And then Friday, the big monthly jobs report, which lately the market has put a lot of significance to. It doesn't always, but it has been doing that lately, really trading off of it. And that'll be like the unemployment rate, new jobs, that type of thing. So Wednesday, Thursday, Friday, big fireworks coming this week. And as we look at this, let me share my screen here. It's very interesting. All that news is coming, and we're at all-time highs. You would think there would be more people that would be buying puts, at least to protect their position, right? If they don't want to get out of it, a lot of times you can see when the market goes up, people are buying puts because they don't want it to go south on them without protection, but they also don't want to sell off just yet because they think, hey, we're going to 50,000 or wherever they think this market's headed. So sometimes you can see the vol increase at an all-time higher in these areas, but you're not seeing it here. The volatility is really low. This is a very scary setup. A lot of times you can have big volatility in August, into July, August. Market gets really thin because so many people are on vacation. A thin market moves easily and can really move quickly. Um, on low volume. And here we are, extremely complacent market, 14.93 on the VIX. Haven't been this complacent since last February. Oh, and by the way, what happened after that? Boom. Volatility went up firmly, up to 30 by what? About a month later, not even a month later. Wow, about 2 or 3 weeks later. So don't get complacent here. Don't believe all the hype that we're never going down. You've got to be careful. Yes, we may continue to go up, but we're really set up here for a nasty downturn because the market is very complacent, volatility is very low, and we have all this big news coming, which easily there could be some disappointment in there, right? They could say, hey, we're not sure about September. I don't think the market's going to like that. And most likely, what you're seeing here in the SPX, and I'm sure they'll be saying this, is that the the move has already been priced in. They have priced in, I would say, for a September rate cut. So if they do get, hey, we're going to get one, we might go a little higher. I don't think it'll be really skying a lot higher because I think a lot of this move up is based on that. Uh, so if they figure out, hey, wait a minute, we're not getting it in September, or there's a decent chance of it, I think this will come off pretty quickly because this is all future looking, right? This is all what they think the Fed's going to do. Of course, there's some tariff information in there too. But if they get disappointed on what the Fed's going to do, I think you'll see a fairly nasty sell off. And not only that, I know you guys have probably heard this from me before. In my experience over the last 25 years of trading, almost always, whenever there's a Fed announcement on a Wednesday, Monday or Tuesday, and many times it's Tuesday, the market will go down. It's not necessarily going to be a lot, but I think you'll see a pullback tomorrow and or Tuesday. That happens just with tremendous reliability whenever there's a Fed week. A Fed announcement coming on Wednesday. You'll see the market sometimes can be pretty firm. And we're not talking about a catastrophic sell-off here. And I don't think that's most likely not going to happen before the FOMC announcement because people are hanging out to at least see what that is. The only way that could happen is if some other news acted on the market. Sorry for that mantle clock you hear gonging in the background. But just a lot of caution warranted in August in general, particularly with the market at all-time highs and extremely complacent about it. It's almost like the market as a whole is now believed this is it. We finally found it, a market that never goes down. Well, that's not going to happen. So be careful here, is all I'm saying. Danger Will Robinson, if you're old enough to remember that one. All right, so what can we do about this? Well, first off, I'm going to go over here to SPX, and I think a calendar is a good trade here, and I'm going to talk a little bit about calendars here. I like calendars, particularly whenever we're under 15. Calendar is actually one of my favorite trades, but for best results, you need to be fairly low volatility. I've done some lately successfully with the volatility around even 16 and 17. I tried them out and they worked. By the way, with my trade alert service, we had 10% winners in about a week and a half. Almost 4 in 2 weeks. We almost got closed at 10% on Friday. I think that'll probably happen tomorrow morning. This is Sunday. So really good couple of weeks there. 10%ers in a week and a half. I don't think we've done that one before. Good stuff. But anyway, if you're interested in my trade service, check out the link in the description. Lots of people are joining. I think you'll really enjoy it. It's a great way to learn to trade while you're following me doing it because I put out the trades before I do them, and you can follow every step I do with alerts sent to you before I make the move myself. But anyway, back to the matter at hand. Calendars I like here because they do have good theta decay. We can get excellent widths. Look at the widths on this. What if you put this thing on if we were, let's say we opened up here on Monday where we closed on Friday. You put this on maybe about 15, 20 points below where we're trading. And look at all the room you got. You got room up for another 100 points. And you got room down for about 100 points. So lots of room in this trade. I like that. And fast time decay. And what else? It's long Vega. Long Vega really impresses me here because I just showed you volatility is very low relative to where it's been. And I also showed you what happened the last time volatility got this low. Now, that's not a given. Sometimes volatility can stay low for a while. But I think when you put it into perfect, this is just a perfect recipe. Thin markets, summertime, all-time highs, complacent market, low volatility. What a perfect setup for some vicious down moves and increased volatility. So let's talk about a little. I want to talk one more thing about calendars before I move on here, and that is why do calendars even work? Where you're selling the near expiration. In this case, I'm selling the 8th and I'm buying the 11th. I don't want any part of being in a trade that expires this Friday. I think there's an excellent chance you'll have volatility so elevated in these Friday options, Friday the 1st, you may not see any relief from your time decay until Friday expiration day. And that can be very painful. And you can sometimes get in trouble with that. So let's just avoid using this Friday expiration and just go out to the next week. Then the market can do what it wants to do this week. And if you need to make an adjustment or do something, you still have plenty of time. So that's why I'm going out to the 8th. But how do calendars work? Every option has its own theta decay. Every day it gets closer to expiration, it's worth a little less on time value alone. So if you see this, the time decay of the 63.70 option for the 8th, the one we're selling, is $2.94 a day. By the way, options don't expire in a linear fashion. They accelerate the closer they get. So this number will get bigger and bigger as we go along. So 294, let's compare that to the one we're buying. Yes, it's only 3 days later, but it's over 40 cents less a day that it is decaying. So you're playing off the faster time decay of the near-term option against the slower time decay of the further out option, which you own. So you're looking for that short to lose its value faster than the long as time goes forward. That's the basics of a calendar. Now, other things can affect how a calendar works. Of course, price movement, right? If we move enough, we'd be outside of our break evens and we could get in trouble. And also volatility. We're long Vega. If volatility goes down against us, meaning our long loses more of its IV than our short does, that can be painful. You can lose $52 every point that happens. However, we're in a position where volatility is likely, I think, to tread water, maybe more likely to go a lot higher than a lot lower. I think you could agree with that at 14 on the VIX. And if it goes higher, many times that'll be in our favor. Our long will get more of that IV than the short because it's a little further out, and you will see some gains just on volatility. Not too long ago, I got out of a calendar at 10% in 2 hours. And the way that happens is if volatility works for you. You can't count on that one. I think I've only had that maybe two, I don't even think three times in my career in 2 hours, 10%. But you can, a lot of times I've gotten out of the next day and things like that if volatility smiles upon you. Now, if you put this trade on tomorrow, let's say everything's just like this, and you put on a trade like this, by the way, if tomorrow, you want to put this trade on later in the day and the market's trading at 6,400, I'd probably move that up maybe to 6,380 or something. So you don't want to just lockstep do 6,370, right? Plus, we could be down. Maybe we'll be at 6,340 tomorrow afternoon. If you still wanted to do this, you might want to put it at 6,330 or 6,320. The reason I'm giving it more room on the downside is because we're so elevated. I want more room for the market to go down, and you can do that and still get lots of room to the upside. So I'm not too worried. Hey, if I'm wrong and it keeps going up, okay, I can always adjust it up here. So that's why I like the calendar here, the long Vega, the fast time decay, lots of room. So this seems to me to be the trade that would be most likely to perform for you this week. It may not be the only one. Maybe you could put on a double diagonal. Maybe you could put on a fly calendar combo. But those are more expensive than this. And I think this, not only is it less expensive, I think it's just got an excellent chance of working for you here this week. So that's what I'm liking, is some kind of a calendar. And while I said, hey, you can get out of these quickly with volatility working in your favor, if you put this on tomorrow, I think you can easily expect to be in it till Friday. And you may very well be in it 7, 8 days. If you don't adjust it at all, I would expect that you'd probably, because you didn't have to, it stayed in range, I would expect you to be in this trade 4 to 7 days. Most of the time. Doesn't mean it couldn't be longer. And I want to make clear here, I don't eject out of a trade just because it went 1 day longer than I expect. Like, so there are people that do that to go, I'm going to be in this trade 7 days. If we don't get where I'm going, I'm out. I think that's foolish because very often what are you going to do? You're going to get right back in the market. What did you achieve by doing that? Not much, right? So I don't get out of a trade just because I've been in it a certain number of days. I would never pull a plug on a trade because of that. Maybe if you're down and you can't fix it, of course, but not that. So I would expect to be in this 4 to 7 days. It could be a little longer, particularly if you have to adjust it. Many times that will lengthen your time in trade. But I think this trade has an excellent chance of performing well in this environment. So if you'd like to hear more about this, want to be with me every day, check those links out in the description. Email me. The email address is there, theoptionsmentorspx@gmail.com. If you want to find out one-on-one mentoring with me, just you and I in a Zoom meeting room, going over where you're at in a trade, no exterior influences, no other people around, just you and I, and we can take your personal situation in skill level and lifestyle. Some people can only want to check in once in a while, maybe once a day. Some people, even can't check in, more than once a day with the market. So that's a different thing or different approach you may use than somebody who wants to trade all day long. So I can help you with whatever your trading lifestyle is, your goals, where you're at with things, and develop you as a trader one-on-one if you like. Email me if you'd like to know more. And as always, my community over at Aramer.com. You can join us there. My trade alert service continues to grow. Don't forget to hit the like and subscribe button and the notify button on this channel. And I appreciate you guys watching me. Great questions. That's some really good questions last time. A lot of people sing a lot of margin. There shouldn't be a bunch of margin on the double diagonals the way I do them, where the long's closer to the money than the short. Or calendars, it should just be a debit. If you're, some people are saying they're getting some crazy margins, like over $120,000. Well, check to make sure your setup's correct. And then I check with customer service. Perhaps you have maybe you don't have a margin account or it's not set up properly. Something's going on because you shouldn't have that kind of margin issue. I know I don't at Schwab. I know some people mentioned they had that at Tasty, but I have students that are at Tasty Trade and they don't have that issue. So check that out with customer service once you make sure your setup's correct and you're not having shorts before the longs or something in a double diagonal or some kind of mix up in the dates. So check all that out, and that shouldn't be happening. You should just have a debit with this trade. This trade right here, if you put it on right here, got filled at the mid, should be $3.40, $340 a contract. That's the end of it. There shouldn't be any margin in the US. Now, there are countries that charge you a margin. I believe Canada does, some others. But if you're in the United States, that should be it for you as far as that goes. Now, there are brokerages I know that give you some problems on calendars in a retirement account or something. Just check all that out with your brokerage. You should be fine. Most people are. All right. I'll be back with you here next week. Maybe Saturday. It could be Sunday, but I'll have another video for you. And I will talk to you then. Have a great week of trading and watch out for that news, folks. And I cannot stress enough what a perfect setup we have for a vicious sell-off. So be careful out there. And I'll talk with you next week. Have a good one. Bye-bye.